Okay, so first of all, a couple of things. One is that there's predefined scans in the ChartSchool. So I'm in ChartSchool here, and one of the options is predefined scans. And if with that, you can see one of the areas that's in here is Keltner channel information. And so I would encourage you to go look at that. The second component, there's a whole article well written by Arthur Hill on Keltner Channels, and Arthur has done an unbelievable job of going through a whole bunch of books and data to combine all of this to make us or to make it very simple to go and investigate each one of these. So Keltner channels were originally created by a guy named Keltner, obviously. And then the second component, Chester Keltner, and his book was How to Make Money in Commodities, and that would compare with the book by William O'Neill, How to Make Money in Stocks. But Linda Raschke came up with a way of updating the Keltner channel, and what she did was she used the average true range to calculate channel width. And StockCharts.com, on our version of Keltner channels, we use that. The average true range. Now, why is that important? It's I'm not going to read the whole article to you or how it's calculated, but I will say you can see here that by changing the ATR, that's the average true range of the move over a time period. So in this case, Arthur shows that over a 10-period time range, it has a wide range, but in a long period time frame, it'll actually be a smaller range. And so you can set the volatility, or how wild the information is, depending on, you can add more time to kind of smooth it out, much like a 200-day moving average is smoother than a 5-day moving average. Anyway, the point would be that what we're trying to do is pick, in this case, the moving average line in the middle is the 20-period moving average. And then we're setting a spread range around it. And there's a whole bunch of different ways to interpret it. And I'm going to go show you some of mine. But Arthur's written a whole bunch here. And how it compares to Bollinger Bands. Bollinger Bands squeeze a lot more and expand a lot more. You won't see that on a Keltner channel. So again, and just maybe if I should just go over here and grab one of these just any chart. But the point I want to make on the setup down here is that we have a whole bunch of different types of channels. We have a Keltner channel. We have simple moving average envelopes and exponential moving average envelopes, and then we have things like Bollinger Bands. So, and there's price channels as well here. So I would encourage you, if you're interested in the concept of channels, price channels, all of these are set up here, and all you have to do is go into ChartSchool, and you can read all about them. And then at the bottom of those ChartSchool articles, Arthur's also written books, or sorry, referenced books that he used when he wrote the articles, and you can go and track it down that way. So this isn't the only way to use Keltner channels. This is my way of using Keltner channels. And I just want to present it as a tool that sits on StockCharts, relatively unknown, but really a strong thing. So what we're going to do, maybe I should show you a picture of the Keltner channel first. And I thought I had this all set up, so I'm a little, there we go. So here's the Keltner channel, and I'll just make these lines a little bit stronger. I put them on dotted first, and then I was going to go back and make them solid, and I forgot on this particular set. So I've just made the Keltner channel line solid here, and then I'm going to scroll down and set it up for the whole group. And by hitting that apply style to all, I've done a scan, I've put them in a chart list, and now this sets up every chart in the chart list with this sort of setting. So in this case, I'm using a weekly Keltner channel, and you can change that sensitivity. So I have set this at 1, and you can see with 1, we still get some dips all the way to the bottom. If you set it to 2, it rarely gets there. And typically what you'd like to do is have something uptrending and then get the bounces off the bottom and ride them to the high. So the overall market's been pulling back a little bit now. This particular stock, you can see on the full stochastics, gives you a dip roughly once a year, and you'd like to participate in those dips. So then when it does pull back, these are nice places to look for entries. So the whole idea behind a Keltner channel, if you're a dividend investor, you want to pick it up while the yield is a little higher based on the price of the stock. Whereas if the stock is breaking out of the top of the range, the yield will be a smaller percentage of your buying price. So then you won't get as big a yield revenue for your investments. So those are different tools that you can use. But in this chart list, and I'm just going to go to view all and just give you some ideas how this works. So I've set it up to 3 years, and you can just see when this starts to come back inside the Keltner channel, that's what we're looking for in this particular scan. And so the same thing here. So right now we're outside the Keltner channel, and when I ran the scan this morning, we were just inside it. But what we'd be hoping for is to catch this pullback and then let it run to the other side of the channel. Now, in this case, the channel is about $12 wide. Depending on the volatility of a stock, it will be wider or narrower because it takes that average true range. And that's why these lines are not a consistent width. It's when the stock all of a sudden starts to run like this, it's going to expand them. And then when the stock trades sideways, it's going to shrink them. So the nice part is it automatically sets the channel width, and we're going to use different channels on different charts here to explain that. So let's get into what the scan would look like. And it, basically country is US. We're looking for stocks. I've picked a simple moving average volume of 40,000. I could have picked 400,000, but I picked a close greater than $10. In order to control your results, you can either change the volume to be 1 million or 400,000 or whatever you'd like, and change the close to be, greater than $5 and under $10 or anything. And if you wanted to close under $10 or under 20, then you would just close less than 20. It's not very hard, but you just have to use the square brackets. So very simply run this scan, and for the actual Keltner channel, what I've done is the weekly lower Keltner channel is less than today's close. And the setting for that is we're going to base it on the 20-period exponential moving average. We're going to make it 1 ATR. So remember in that ChartSchool article, I showed the 1, the 2, and the 3. Well, we're using weekly here. So we're trying to get pullbacks in an uptrend as opposed to buying stocks that are headed down and buying them at the very bottom while they continue lower. So not looking for that in this particular thing. I haven't set up anything that says the Keltner channel has to be uptrending, but that would be easy to do. Just say, the 20-period moving average is higher than the 20-period moving average was 1 month ago. And last week's lower Keltner channel. So again, the same settings. So last week's, the Keltner channel was higher than the close. So in other words, the close was below the Keltner channel. And then this week, the close is greater than the lower Keltner channel. Again, let's go look at that on a zoomed in version here. So what we're looking for is it was below. Last week it was just below, and then this week it would close back above. And so we're looking for that simple little clue that it's trying to improve. Now, in this case, the Keltner channel is dropping, so maybe it's too late. But sometimes you can get them when they're uptrending and you get a quick pullback. Those are a little nicer, maybe something more like this. So that's a weekly version. Now let's go and look. I'm going to show you the difference in the structure. So here what we've done is we've done a Keltner channel, and we're looking for a breakout to the upside. And again, weekly chart, 3-year period. And what the difference is on the technical scan is we've just changed it to be exactly the opposite. So the upper Keltner channel is now under today's close, and last week's upper Keltner channel was below. I probably should have said last week's close, but it was yesterday's close. So this, I didn't quite program that last area right there, as a matter of fact. So with that, you take those Keltner channels, and it's going to give you some results. And in this case, it only gave me 5, so they're very easy to look through. Let's just make sure I've saved that style to all of these charts. And The idea being, so I've just dumped them in a scan bucket, and for everybody's information on scanning, what you do is you just have a whole bunch of these all set up with any names, and pick a name of a rock band. It could be Rush, could be Dire Straits, could be Willie Nelson, whatever you want. Or you can, George, Paul, Ringo. I did John Murphy, Greg Schnell, Martin Prey. So you get to have some fun and flexibility with naming your scan, but have a whole bunch of scan buckets and just drop stuff into there. So here are these charts, and what you see here is this chart had been oversold deeply, pulled up, came back down, tested the bottom of this middle area, and is now breaking back out the top side. So it looks like, to me, it's trying to trend change. And in Arthur's writing in the ChartSchool article, what he talks about is it breaks out to the top side and then pulls back, and then you're trying to buy it around this middle and watch it break out again. That is very similar to an Alexander Elder style of investing, and you could have the colored bars and they would work to help you with that. So all of these are different tools, and the way you set them up is your choice. Here you've got a full stochastic starting to cross midway. That's usually a very bullish trait when the full stochastic doesn't go all the way to the bottom of the range. So this is an interesting place to look for a cross and perhaps a turn upside. We'll just quickly flip through some of these. Oh yeah, these other three were just, even though I had scanned for stocks only, these three ETFs came up for some reason. So they've obviously got a coding issue from the exchange. Okay, the next one I'm going to do is go into a daily Keltner channel scan. And the reason I want to do that, let's just go open up some of these charts. So it comes up with a longer list. And what we want to do here is this is starting to break down and now breaking out to the upside, so much like the Elder look. You can set this up so it's turning to the upside. And as you get these turns, the idea is to try and put these stocks on your watch list and then figure out where you want to enter them. On this one, today's upper Keltner channel is less than yesterday's close. So in other words, the price has moved above the Keltner channel, and yesterday's upper Keltner channel is below yesterday's close. And what I've done here, notice I've made this 0.05. So I've set the bands really narrow. And the idea behind doing that is it's going to give you a ribbon, and this ribbon effect helps you in that what you see is the stock trades to the upside, so you'd buy the breakout, and if it trades down to the lower side of the band, you would sell it. So in this case, obviously that's a losing trade. You bought it here and you're selling it here. Now it trades back up to the upside and breaks all the way through. Your sell point is when it closes below your fly paper or whatever. I learned this from a guy who runs a website called uptrends.com. But when it broke out here, you can see it rode all the way up, and you caught all of this lift by setting this very narrow, and this width of this is your stop level. So in this case, it doesn't break out to the top side. Here it breaks out to the top side, but never closes below. So you would have been on watch here, but it didn't close below, and then turns around and keeps running. And so your entry point is here and your sell point is here. Conversely, here's your stop. This is your sell point down here. When something gets so euphoric for a month, there's probably a clue you might want to take some money off the table. But in a normal uptrending stock, and we could pick some of the better names, but perhaps this one is just breaking out to a new buy signal today after consolidating for 3 or 4 months. Looks pretty good to me. Would be an interesting stock to spend more time looking at. Here's one, American Depository Shares, and you can see it's traded sideways for a couple of months, but it's been above this channel for a while. Here it dipped below, but never closed below. So you can use these Keltner channels just to structure any sort of trade you want. And the one I was on here before, this was just buying a daily chart breakout. But I would actually prefer to use the flypaper version where you set it up narrower rather than keeping the standard settings, and just buy the breakout to the upside and then use the downside as a stop. So the purpose of the Keltner channel is not to because it auto scales, it helps you define an entry and an exit based on the volatility of that stock or how much that stock likes to change. So if we took this setup and just pick, one of the big movers lately has been in the semiconductor space. And so here you have Micron, and it's basically doing nothing, and it finally starts to break out here. And it's easy in hindsight because I would have bought this one and got stopped out here. But you're trading along here, and then all of a sudden this thing just goes on a beautiful run, 30 or 40%, and then it comes back in. If you wait all the way for this to close down here, it can be expensive. You're giving up quite a bit of gains. But when you see something move 20 or 30% in a couple of weeks, you're going to try and protect some of that capital. So, after it had been on such a run and go sideways, there's a reason to start to look. You can see it starts to underperform the S&P 500. That's one of my favorite sell signals on something that really runs quickly. So taking a combination of these things and overlaying them can really help you use the Keltner channels. What makes Keltner channels so interesting right now is that the market's pulled back 10%. So if you could find something that's breaking out to new 52-week highs, obviously it's going to be above its Keltner channel because the Keltner channel is using a moving average, and now you're ahead of the moving average. But if you can find some things that are starting to break out and then try to find an entry, so in this case here, you're looking, and it might be months before you actually get the setup you want. In this case, this is a stop out, and this case is a buy, and you get to enjoy the ride. We keep talking about Nvidia, and everybody wants to know about Nvidia. I think it's been on the watch list every day this week for stocks to talk about, but it continues to sit under this flypaper channel. And Stephen Whiteside, who runs Uptrend, that's what he calls it, his flypaper channel, whether it sticks to it or not. But the idea is it's not on a buy signal until it can start getting back above the trend. And you could tighten this down and make it a quarter of an ATR width or whatever you prefer. You can set it as tight as you want. But I think it's really nice for people trying to trade that are afraid to put a stop somewhere. And this doesn't put the stop at your buy point, because your buy point is as it goes above the moving average or above the outside of the Keltner channel, but your stop goes at the lower edge of the Keltner channel. So all through here, you're not getting a buy signal, and you finally get one on the breakout here. Now, this is a little bit unfortunate that it gaps up so much, but it goes on a 30-day run that is really, really stunning. And it's those kind of gains that you can help lock in by using these Keltner channels on a really volatile stock, or a high momentum name might be a kinder way to say that. Okay, so hopefully I've explained what a Keltner channel is. Now, one of the things I'd like to do is just compare it to, say, a Bollinger Band, so you can see it on a stock that we're all familiar with. But the Bollinger Band, let's make these lines dark just so that they're more obvious. Green is fine, and then we'll make them very strong. And what you see here is these Bollinger Bands are 2 standard deviations away. Well, we've obviously not tried to get anywhere near that level because we wanted entries in here. And so you can overlay these and use them in tandem. You could use them any way you want to use them. Bouncing off the bottom of the Bollinger, that's one trade, riding it to the other side. There's multiple different ways to do this. The one thing that most people have trouble with is setting stops, and this Keltner channel can help you set stops. So in this case over here, it's running all the way up, and it finally breaks down to the bottom side of this. And, you've had a huge run, so you're probably going to you're trying to look for a safe place to take profits, and at least this would be a clue that things are starting to change. So the Bollinger Band is much wider. The signals on the Bollinger Band, of course, like this is $180 to $230. So it's a $50 Bollinger Band. The first time it touches the other side of the range, that's a lot of money to give back. Now, how you trade it. Again, this is high volatility, so when it breaks down below this 20-period moving average, it moved a long way. Both of these would have given you a very low sell signal and a long way from the high. Nothing's a perfect trading system, but I will point out that one of the things you're looking for on a trading system is just something that helps you get in and helps you get out. And what I like about the Keltner channel is you can set it to the volatility you want. So you can do that with Bollinger Bands too, but again, they really shrink and contract a lot. Let's go back to this first one. What you see here on a weekly chart, again, for people who don't want to trade daily or whatever, this is a much better trend to look at, and I've zoomed in here a little bit. But I down at the bottom, I have my PPO line here, and in this case, it's starting to break. So I would actually not take this trade because it's not going the right way for me. It's near the top and near the end of the run, and I would probably prefer to take something that the PPO is declining like this, and now I'm starting to get a buy signal to the upside, and then that's the one that I would much rather take with a lot more upside momentum. So it's more difficult, but I want to get it when the PPO is starting to improve, not when the PPO is starting to fade, if that makes any sense. So weekly is a whole different style. Again, you have to have, this move from $58 to $50 in a couple of weeks is going to, well, even in a week is going to scare you a little bit. But for longer term traders, you're going to set the Keltner channels on a weekly chart. For short term traders, you're going to set them on a daily chart. Feel free to go back and read Arthur's setups for how to use some of these trading systems. You can also use them in combination with the full stochastics. And one of the reasons for that is the full stochastics measures the percent where the price is relative to the last period. So in this case, 14 periods, is the price near the high or the low? Well, it's at near the lows within the last 14-week trading range. So the full stochastic is right down at 5 or 10% here. When it turns back up, this is a bullish signal. This is also helping you confirm your signal on a weekly chart, as an example. And much like I talked about the S&P 500 on that 60-minute chart, we'd want to see it come down and bounce off zero and head higher. That is a really nice place to buy stocks when you have a momentum line coming down to zero and then kicking off. And I think Tom talks about that almost full time. So those are the more critical components of Keltner channels. There's books written on it, so it's not like I can share it all with you in a few minutes. But I highlighted Keltner channels as a trading idea in my book, so you can go in and see how some of those things are set up. I would encourage you to at least experience with Keltner channels, and understanding channels is a very important point in the stock market, because price does try to move in a range. And so here's one watt. This broke out all the way to the upside. It's pulled back now. There's obviously something that sent that stock surging. The real question is how to get in it. And I think we talked earlier this week, buying those parabolics. I think it was on Intercept Pharmaceuticals. Basically, it's been drifting lower for 3 years. But perhaps you're looking to get something on a deeply oversold level and then try and buy it on the breakout following this kind of very bullish signal. Again, that's a Nicholas Darvos sort of investment style. And with that, I'm going to wrap it up. I want to make sure that everybody understands Keltner channels. So if you need more help, go to ChartSchool, try and look at it there. Arthur's got a couple of books at the bottom referenced in there. I covered off Keltner channels in my book. There's a couple of pages on that. But if you want to learn more about Keltner channels, I would encourage you to look at that How to Make Money in Commodities, and then Linda Raschke's Modifications. Those are both great ideas.
Well, that was excellent. I know there were just a few questions in the chat room.
Okay.
Let's see. Greg said he has his channel set to 1. How do we change it, and what is the difference between 1 and another number, say 2?
I obviously didn't explain that very well. Okay, so the middle number in the Keltner channel is the number of ATRs, so the average true range. So you're going to take a 10-day period or a 10-week period, and it's going to say what's the range, and maybe it's 2% or whatever per day. If I take, so a 1 ATR is 2%, a 2 ATR would be 4%, and a 3 ATR would be 6%. So you're just making it much wider to get bigger and bigger extremes. And maybe you only want to trade huge extremes. And so with the Keltner channel, you can define the sensitivity of what you want to trade.
Excellent. Well, I think I know it enlightened me. I haven't really studied the Keltner channels, and I definitely enjoyed that presentation. Excellent teacher, as always.
Thanks.